Hey everybody, Brian Shannon here from Alphatrends.net. Today is Friday, June 28th, 2024. We ended the week, month, and first half of the year, and pretty impressive first half of the year. Semiconductors up close to 49%. The only thing down was the bonds year to date. Everything else here solidly green. Can't really say solid, I guess, for the Russell 2000, which is only up 1%. Let's take a look at the charts and make some sense of it all, as we always do. And we will remember, I hope, to look at crypto as well towards the end of this. S&P came close to making a new all-time high here. In fact, it may have slightly and then backed off here today. We basically didn't really make much progress this week. We're still stuck in this range here that we've been in for the last week and a half as the market continues to correct sideways through time. We have to remember, where has this market come from? Well, in the last month and a half, we have seen it rally from just under 500 up to 550, so a 10% rally. And now we're seeing a digestion of these gains through time. What we want to know is what's next. Well, with a declining 5-day moving average and just lack of upside progress in here the last week, it might be distribution, meaning just a little bit of profit taking and to get a little bit less aggressive demand rather, that might lead to a breakdown and a little bit deeper test. So just be aware, as I said last week, and I often say, that it only ends badly if you don't have an exit strategy, an exit plan for whatever your time frame is. I'm not overly concerned that we're due for a big sell-off or anything like that, but if one does come, I know that I will have stops in place, that I won't be taking a large loss. I hope you can say the same as well. The 20-day moving average is rapidly rising right up into this range, so that will kind of reinforce this area as a level of interest. And we have the anchored volume weighted average price from this level right here in that same spot. The next anchored VWAP is from this gap, and that would bring us down a little bit deeper. So just this tells me that the light remains yellow, basically caution. We still want to give the overall benefit of the doubt to the buyers because we're in a primary uptrend, but it doesn't mean that we're going to be aggressive. Like I said last week, foot off the gas a little bit, maybe tap the brakes. The NASDAQ came up close to a new all-time, maybe it did make a new all-time high. It really isn't irrelevant, but the fact is we're still kind of stuck in a little bit of a range here as well for the NASDAQ, and that's kind of been defined by 473 up to 487. So we've got this box that we're in, and this is basically the midpoint of it. You can see we have the 5-day moving average and the anchor from this gap lower, all kind of together in the same spot. So it's this area down here that if we break down and test this level, and even under, the faster it comes down and undercuts it, the more likely it is that it would bounce first before a deeper decline comes. So in other words, if we see a quick sell-off, don't expect the end of the world yet. Not really the end of the world, but don't expect a bigger decline. Instead, if it undercuts this, I think you would get a bounce, and then the quality of that bounce and whether it follows back through to the upside or if it stalls out, then we might be due for a deeper pullback. That's the scenario that I'm going to be looking for. The Russell 2000, as I've been saying over and over again, I view it as a complete waste of time. Today it was higher, and that brought it back to positive for the year. But look at this. I mean, it gapped up and completely failed. So it just trades like a commodity ETF with all these gaps, not something that I want to be participating in. The semiconductors, let's erase all that stuff and put some new anchors on here from this low, for instance. And we still are fighting with the low from this month's anchor, and you can see that here on the daily time frame as well. The 5-day moving average is declining. That will flatten out on Monday because we'll be getting rid of this data. This line right here shows where we closed 5 days ago exactly, and that moves forward 1 bar throughout the day on this 30-minute time frame that you see here. So every new 30-minute period, that bar moves forward, and it tells me exactly where that 5-day moving average, that rolling true 5-day moving average, has started at. So we can start to anticipate what that 5-day moving average is going to do. So today we saw a rally, and as I say, you don't trust rallies with a declining 5-day moving average, and it did fail. Now, the key level in here is going to continue to be really 255-ish. If we break below and hold below that level, then it's possible we're going to see a deeper pullback that might come down to the conjunction of the 50-day moving average and the anchor off of the April low. So more defense is warranted in the semiconductors. In fact, I'm looking at my screen for NVIDIA. NVIDIA this week, I pointed it out several times on Twitter, is that we're trapped underneath not only that 5-day moving average is declining, and we were trapped at it right here and here. In fact, I put out a warning right there to raise your stops. I mean, exactly at that point. So hopefully that was something you paid attention to, because that was the high right at the 5-day moving average, and it was the high of the week on this bounce so far. And don't forget, this bounce occurred from the anchor from this gap. So it is following along logically the way these anchored VWAPs work. And today we found that, again, we are unable to close above the anchor from the all-time high. We're coming down to this 5-day range, and this little level, maybe we get a quick undercut of that, bounce up, and then test this again. And if we test that anchor again and it fails, well, then I think you've got to be really prepared for a deeper pullback in NVIDIA, perhaps down towards that 50-day moving average. It's certainly not a price target, but a level of interest. I continue to think that the biotechs are setting up for something bigger here that we're seeing. I don't know why there's my 30-minute time frame. That's what I outlined for subscribers last night in my video at alphatrends.net. And I do this video basically every single night for Alphatrends subscribers, as well as stock trade ideas that I lay out the specifics on. But anyways, the biotechs here are still holding above the anchor from the year-to-date high, and that anchor is also reinforced by this. This purple is the year-to-date. I guess that's pink, and the purple is off the high. But this pink one here is the year-to-date anchor. What we also see in here is what we were looking for. One, we have a rising 20-day moving average. That's that red line right in there. And this week we saw the 50-day moving average rising. If you recall, I was talking last week that we would be getting rid of this data. So this vertical line here is where we were 50 days ago. So as we're getting rid of this data and replacing it over here, of course, that drags the 50-day moving average higher. Anyways, we have a rising 20, 50, and 200-day moving average in the biotechs. They are now in the best position they have been in to be able to sustain a move since we saw that strength at the beginning of the year. So we look to the shorter term time frame, and I think something along the lines of maybe even breaking above here with a stop underneath this level is where we want to start to get involved in the biotechs from a longer term perspective. Here's our weekly chart, and this anchored volume weighted average price off of that high has been holding this market back as well. We're above the anchor from this peak, so things are in place for a potential move higher. One of the bigger names in the biotech group is Amgen, and Amgen is looking like, oh, that's SMG. No wonder it didn't look as what I thought it looked like. AMGN, if I type it in wrong, is looking like perhaps this stock could be a leader in this group. So maybe keep an eye on Amgen. It's still got a little pattern here. So just being a rising 5-day moving average isn't enough. It's a little bit neutral in here. Let's take a look at the anchor off of this low, and no surprise, that's where it pulled back to today. Anyways, we have the anchor off of this peak, which we're going to need to get back above. And we want to see this pattern here. We have this high, we have this low, a lower high and a lower low. So we have that pattern in here this week. So it needs to maybe rally up a little bit, create a higher low, and then get going if you're looking at Amgen in particular, because that is one that looks decent. Anyways, let's continue on beyond the biotechs, the financial stocks. I continue to think these are a waste of time. They did exactly what I wanted them to do this week, which was to break above this little band of resistance, trap people, and then sell off. I was hoping maybe they pull back to the 5-day moving average, but as I always say, I don't trade the financial stocks, so it really doesn't matter to me. The bigger picture is we're just in a range here, and it's a chop fest in the financials, so I really would suggest you just don't trade them at all. And same is kind of true for energy. Energy is maybe starting to look a little bit better, but we do still have that declining 50-day moving average. That's that blue line right there. This is where we were 50 days ago. So what does that mean for next week? Well, if we want to anticipate the direction of this blue 50-day moving average, we have to remember that next week we get rid of these 5 days, in that actually 4 days because we have a market holiday. And that means that even if the biotechs rally up, and let's say get through that 50-day moving average, I think they're highly unlikely to do something like this because the 50-day moving average will be declining. So still not ready to call the energy names bullish in there, so just be aware of that. This week was a great week for some of the stocks I mentioned on Twitter, on X, and I almost forgot the Bitcoin in those guys. We'll talk about those in a minute. Anyways, I was talking about that TGTX, which I had gotten. If you follow me on Tuesdays when I do Trader TV Live, I said I was getting out of a lot of this up there, and I exited the balance of it here. Started nibbling a little bit more, but anyways, that was a great trade. Actually, my best trade of the year because I loaded up on size with it. But I also talked about Tesla, and Tesla did get going right here, just the way it was supposed to, and then it's rallied beyond this little peak right here, closing in on that 200-day moving average. Don't get too comfortable with this rally in Tesla. I don't think it's going to hold because we have a declining 200-day moving average. It's more likely to maybe run up to that level and then begin to start to fail and set up for a better trade somewhere down the road, because again, when we look at the weekly time frame, we still have maybe a bottom being carved out here, but with the 200-day moving average declining, I personally do not trust it. I had mentioned this one, and I actually didn't even trade it. Had an 8%, has an 8% dividend, maybe 7% now, but I mentioned it right over here. I never bought it. It was about this price because I was thinking it would pull back a little bit and then get going. So in addition to locking it for the people who bought it here with an 8.6% annual dividend yield, the stock is now $1.75 higher. So nicely done in there if you're personally involved. There were a couple other ones that I mentioned as well. One of them actually that didn't work was SHOO, and that one I never got involved. I was looking for it to break above this little resistance here. You know, I talk about it all the time that we want to see a flat to rising 5-day moving average and then a break of the range. It didn't do that. I was looking for it to pull back and get going, so can't even call it a failure because it never triggered. Let's talk about the cryptos because they're a mess. We have been cautious on these, and I remain quite cautious. In fact, as I mentioned a couple weeks ago, I had gotten involved on the pullback in here and got out right here on Bitcoin. And I did buy some at 59.5 earlier this week. I mentioned that also on Tuesday. Sold some up in here, and then I got out of the balance right in here as it got stuck underneath the anchor from that bounce. Looks like we're headed for another test of the year-to-date anchor. The more times any level of support or resistance is tested, the more likely it is to fail. So be very careful in here with Bitcoin. We're below a declining 20 and 50-day moving average. We're below the anchor for the from the lowest point of this year, and we're below that declining 5-day moving average still. So I'm completely out of crypto. I have no exposure to it, nor do I want any. I don't feel left out when it rallies like this, not with a declining 5-day moving average. And this is the 4-hour chart over here on the sideline with Ethereum. And it was on Bitcoin as well. But same story, we got trapped below a declining 20, and the 50-day moving average is advancing, but we're below it. It looks like we're probably headed for a test of the 3150, 3175 level in there. Solana got a little bit of news, and it popped up, after I think Gensler or somebody said something about the likelihood of a Solana ETF being approved. If you're long in here, just be aware that this is an important level. It's the anchor from this low right here that we saw this week. It still needs time to recover, and if it's going to recover, it needs to see over here a higher low. So if this ends up being a higher low, then maybe you can start to nibble, but generally speaking, with a declining 20-day moving average below the 50, below the year-to-date, it was below the year-to-date anchor in here, but below the anchor from the peak and from this level right here, I think you still have to be quite cautious in regards to all the cryptos, so no hurry to increase any exposure there. Have a good weekend.